Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. And after yesterday's disappointment, we are finally back in the green. And now Nifty has broken that 3-day losing streak as well and reclaimed that 25,850 odd levels. But yes, in the day we also saw Nifty reclaiming that 25,900 odd levels itself. But it has cooled off from those levels, so to say, as of now. But yes, while the day started on a flattish note, but the picture choir flipped after 11 a.m. and we have been able to sustain the gains so far. But yes, just 30 minutes to go before we get to the close. But for now, we are seeing good participation, which is coming in from the broader end of the markets. Both the mid-cap and small-cap index have been outperforming the benchmarks. India Wexes has also relatively cooled off. 4% cool off that is coming in from the India Wix, showcasing that there's some kind of stability which is returning to the markets. And yes, so all of the sectoral indices also have been swimming in the green. If you look at Nifty Metal, auto indices, they have been leading the gains. Bank Nifty has also snapped its 3-day losing streak. Consumer durables, which was yesterday one of the key drags, is also once again in the positive territory. IT stocks also look quite buoyant on the back of the Federal Reserve's 25 bips rate cut, and you can see all the large cap names also dominating the top Nifty 50 gainers list as well. But yes, the trouble has been coming in from the local currency front, where we have seen that the rupee has fallen to a fresh all-time low of about 90.47 levels. So yes, while equities have been on the cheery end, the currency weakness continues as of now. But yes, so we'll be discussing more of that later in a bit. But yes, let's take a quick look at how the top gainers and losers look like on the Nifty 50. If you look at the gainers, Eternal doing well, 3% gains coming in for the counter after it updated about its credit ratings. Adani Enterprises also doing well, 3% gains coming in. Yesterday, we did see that the company saw an oversubscribed rights issue. Today also the stock has been holding up well, 3% gains coming in for Adani Enterprises. Metal stocks have been holding up well, as a result of which you can see Tata Steel doing well, 2.4% gains coming in for Tata Steel. Jio Financial also holding up well, 2% gains coming in for there. Kotak Mahindra Bank doing well once again for another day. So with about 2% gains coming in for Kotak Mahindra Bank as well. But yes, on the losers front, where we stand, you can take a look at Asian Paints being as a key drag, nearly a percent decline coming in for Asian Paints. Bharti Airtel also seeing some cool off, 0.7% cut coming in there. Axis Bank, Bajaj Finance seeing a bit of cool off. ONGC and Bharat Electronics, some of the other losers on the Nifty 50. But yes, to understand the last minutes of the trade and how you should be positioned in a trade like this, I'll quickly go across to the technical expert of the show, Vishnu Kant Upadhyay, Assistant Vice President, Research and Advisory at Master Capital Services. Vishnu, good afternoon. I mean, finally we are back in the recovery after this week was turning out to be a losing series for Nifty. And Nifty also reclaimed those 25,900 levels. So what is the next that we can watch out for?
Hi, Lovisha. A very good afternoon, and thank you for getting me on the show. Yes, you are exactly right. Nifty snapped a 3-day losing streak, and this gain has been, attributed to perhaps a Fed move that where we have seen a 25 basic points rate cut in yesterday's. So, well, technically, if we see the market has been oscillated between two key moving averages, that is 21 and 55-day exponential moving averages. For third consecutive week, a day, we have seen prices taking U-turn from the proximity of 55-day exponential moving average that aligns around 25,680, while on the higher side, 21-day exponential moving average that aligns around 25,950 or odd levels, we can say 26,000. So prices has been, oscillating in this tight range. But considering the recent development where we have seen, a Fed rate cut, and we are also seeing progress towards India-US trade deal that is, about to strike. Perhaps let's keep the finger crossed for that. That could be strike very soon. So considering all these development, we can say the bias will remain, sideways higher, and from lower levels we can, see buying in key benchmark indices. Yes, the definite drag remains from the broader market, that is, mid cap and small cap, and we are continuously seeing some, laggard from that side. So yes, key benchmark indices, large caps are doing good, but yes, there is still pain in the small cap indices.
Still pain in the small cap index could be visible. But yes, sir, what about the Bank Nifty index? I mean, it snapped its 3-day losing streak. What can we watch out next? Today also the Bank Nifty index has been showing stable gains.
So basically, Ravisha, Bank Nifty has been a good to protect is a key horizontal, support area that aligns around 58,780. And I believe as long as prices remains above that level, it's looking relatively good compared to Nifty because currently it is trading their all key moving average that is 21, 55, 100, 200, while Nifty is still trading below its at 21-day exponential moving average, but Bank Nifty is comfortably trading above that level. So yes, Bank Nifty is looking quite good, and I would say prices are all set for 59 500, 59 600 odd levels in this flow.
Okay, all right. Bank Nifty levels that we need to watch out for. But yes, let's talk about metal stocks as well. We can see the Tata Steel has been holding up quite well on the back of the corporate news as well. But yes, the entire metal basket has been doing well on the back of the Fed's rate cut. What are you watching out, Vishnu? Anything that you're finding attractive from the current levels from the metal basket?
Yeah, you quoted my favorite stock basically. The entire segment is, getting support from the rate cut apart from that weakness in the dollar index that declined to a 7 week low. So I think, if you look at a Tata Steel on a graph, daily graph, then you will find that the prices are forming a sort of ascending triangle pattern. And apart from that, it has taken a very sharp U-turn from the proximity of 200 exponential moving average. So I believe more gain is on card and prices should approach towards 176 178, so definitely one can go long at a current market levels and keep the stop loss below 163 for the target of 176 178.
Okay, all right. That's the level that we need to watch out for Tata Steel as well. Let's discuss about more individual stock movers for today. Let's discuss about Indigo. Once again, Interglobe Aviation, the stock is in focus. It's showcasing a marginally higher gain as of now, flat with a positive bias. But given that the company has already cut its guidance for various financial parameters for the third quarter of the financial year. Now, Indigo now expects its ask, that is your average seat kilometer, to grow in high single digits to early double digits compared to the earlier guidance of its high teens. In a statement also, the airline has said that they have taken measures to reset their operations, which has resulted in the cancellations of around 4,500 flights during that week, and which has resulted in the loss of their revenue itself. But yes, today the stock is a little stable, nearly 0.2% gain coming in. But yes, this month itself, the stock has seen a decline of about 15 to 17%. Vishnu, what's your view? I mean, is it a clear avoid for you at this point of time?
Yeah, definitely. As I was, reading some reports that from the fundamental point of the view, that there has not been a very major drag, in first quarter of next financial year, definitely. But yes, as the dust has not been settled, and after the DGCA announcement that the 10% reduction in the flats in the winter session, so I think there would be some fundamental pain in the counter, but the stock is so much beaten down at a current market level. So neither we are saying one should go short in the stock and one should go long in the counter. So definitely, the dust has not been settled. So still, this is a very clear cut, away from this counter.
Okay, clear avoid at this point of time. All right, let's discuss of another stock in focus. That is your DCM Shriram. The stock has been showing good gains, 5%, nearly 6% gains coming in for the counter after it entered into a strategic MOU with Bayer Crop Science aimed at accelerating sustainable and farmer-focused agricultural development across India. And the agreement sets out some collaborations which is spanning across your agri inputs and sustainable farming models as well. Today, the stock has seen good volumes, 5.5% gains. But yes, Vishnu, what's your view on DCM Shriram, and what is the next target that we need to watch out for?
Yes, definitely following this news, the volume has been a very tremendous in the DCM 3 in today's trading session. And I believe this, bullishness that has been emerged in today's trading session should remain intact for a few days at least. And I believe prices should approach towards 1400, 1450 in a coming days. So our recommendation will be buy on DCM Sriram, but one should go long in this counter in a staggered way. I mean, first installment of buying can be done at a current market rate that is 1277, and second installment of buying should be done on a corrective fall towards 1244. While in that case, stop loss should be placed below 1220. And having said that, the targets will be around 1400 and 1450.
Okay, all right. That's the view for DCM Shriram. Another stock which has been buzzing in the trades, that's your Shakti Pumps. The stock is seeing a gain of about 15% after it announced that it has received a letter of empanelment from the Maharashtra State Electricity Distribution for the supply and installation of 16,000 off-grid DC solar photovoltaic water pumping systems across the state itself. But yes, the stock has been seeing good gains, and of course the order value is at about 400 crore rupees. Vishnu, what's your view for Shakti Pumps? I mean, good gains today.
Yeah, well, Lovisha, so this gain has been, attributed by this news that you quoted, in fact. But the stock has been in a very, bearish phase for last, many months. So still trading below its a 21-day exponential moving average. So I am not counting on this gain because that has been due to this fundamental news. So technically, let the prices move up 660, 675, and on a decisive close above that level, 670 or 675. I would say one can go long in this counter as long as it remains below this horizontal resistance, one should avoid.
Okay, all right. The trend looks quite negative at this point of time for Shakti Pumps then. Let's discuss about another stock in focus, that is your TCS. Well, the stock is marginally up, flat with a positive bias, but the company did announce a $700 million all-cash acquisition of AI services and advisory firm, which is your Coastal Cloud. Now, the deal is expected to close by January 31st of next year, but this is one of the TCS biggest buyouts since 2004 listing, and of course, it comes as the company has stepped up its inorganic push. But yes, on the technical levels, what do you believe, Vishnu? Because in comparison to Infosys and Wipro, the stock is still underperforming.
Yes, definitely. And I think there has been also a very technical reasons behind this laggard in this counter. You rightly mentioned that the Infosys is doing a good compared to a Tata consultancy. But if you talk about the TCS, technically there is a moderate bullishness in the counter as prices are comfortably trading over its a falling trend line, resistance area and all key moving averages. And for last many days, we have seen that the price is taking support at a 21-day exponential moving average. In today's trading session as well, we have seen that prices fell to low 3153. That's a quite proximity of 21-day exponential moving average. And from that level, we have seen sharp recovery in the counter. So counting on this, EMA line, I believe this bullishness is likely to remain intact, and I believe in a short term prices are all set to, move higher towards 3350, 3380 odd levels. So yes, one can go long at a current market rate because risk reward is in favor. Keep a stop loss below 3140, while on the higher side, 3340 will be on card.
All right, 3140 is a support zone for TCS, and the risk reward looks favorable at the current price point. All right, let's quickly move on to the next stock in focus. That is your Kant Technology. Of course, it's one of the stock that has been grabbing the headlines today. However, the stock has been doing quite well. 3% gains coming in for the counter, and similar rebound we are seeing in other EMS stocks as well. PG Electroplast is showcasing a gain of about 1%. Dixon Tech, in comparison, has been doing quite well with about 5% gains. But yes, coming to you, Vishnu, I mean, how would you see Kant Technologies going ahead in the near term?
Well, Lovisha, so there has been pain in entire EMS, space for last many days, be it a PG, Electroplast, Keynes, and other stocks. Technically, that wouldn't be very prudent to comment on this because, a couple of days back, prices collapsed below. It's a very crucial horizontal support that aligns around 3900. But we have seen a very sharp recovery from that level. I think that has been perhaps due to some reports came from, some, global broking houses. But still, I would say for a conservative players, one should stay away from this counter. And for a short term, if someone wants to buy, let the stock move above 4500 with a full conviction. In that case, prices has have potential to reach towards 5100. So yes, from that level, I think risk reward definitely in favor because stock is trading near a very crucial horizontal support, but stock has not given any sign of recovery at a current level. So that's why I do not have nothing to say that prices will take a sharp recovery. So that's why I would say stay away from this counter.
Okay, stay away from the counter at this current price. Of course, today also we did see a global brokerage note that came in on Keynes Tech, where Nomura has downgraded the revision, the target price for the counter, but they have maintained a buy call for Keynes Tech. So yes, something to watch out in the coming days as well. But yes, let's talk about India Cements. The stock is showcasing a gain of about 1%, and we had a good brokerage note that where ICICI Securities have reinitiated the coverage on this particular counter, but they have given out a hold rating on citing on improving operational fundamentals under Ultratech Cement, including their green power ramp up as well. But yes, India Cements, how does it look like on the charts for you, Vishnu? I mean, if you look at the stock from a year-to-date perspective, the stock has quite done well, 11% gains. But from the near term, can we expect it to hold the gains?
Undoubtedly, undoubtedly. As you mentioned that the stock has given a very good returns in last few months or weeks, we can say. But still, it has room, it has potential to extend this rally towards 450, 455. So I would say definitely one can go long for the target of 450, and stop loss should be placed below 399.
Okay, 399 is a stop loss for India Cement, something to watch out for. But yes, let's discuss about Tata Elxsi. The stock has been doing well. We did see a brokerage note where PL Capital has upgraded its rating on Tata Elxsi to hold from a reduce. But they have, given that they've cited some stock price corrections in a still fragile environment outside the segment, automotive segment, which is keeping them a little cautious. But still, they have upgraded the stock at this point of time. But yes, coming to you, Vishnu, Tata Elxsi, of course, today the stock has been showing good gains. But in the past 1 month, we've seen there's a negative trend which has engulfed in the counter. What can we expect next?
See, stock is continuously forming a lower highs and lower lows kind of pattern, and apart from that, it's trading below. It's all key moving averages. So I'm not considering the today's gain because it is we can say some gain from the fundamental news, or we can say some short covering in the stock. So I cannot rely on this gain. If there would be a bullishness in the counter, that will only above when prices will move above 5250 and 5260. So as long as prices are trading below, it's a recent top that aligns around 5260 or 5270. The bearishness in counter will remain unimpaired. So let the counter move up that level. As long as prices are trading above that resistance area, uh, prices will remain under pressure.
Okay, all right. That's the view for Tata Elxsi. Let's move on and talk about another stock in focus. That is your Hindustan Zinc. It has extended the gains to about the third consecutive session. And today also the stock has risen by about 2%. Given that silver prices have soared to fresh lifetime highs after the US Fed's rate cut. Yesterday also silver hit a record high. Today also it's a new record high for silver prices. So yes, the stock has risen nearly 9% in the past 3 trading sessions itself. But yes, Vishnu, Hindustan Zinc, what's your view? Can it further extend gains from the current levels?
Yeah, definitely, Lovisha. There has been so many fundamental as well as technical triggers or tailwinds we can say in prices. So fundamentally, as you mentioned, that the silver is making an all-time high on a daily basis, almost we can say. And technically, the stock has moved above its a falling trend line resistance. Apart from that, all trading above all key moving averages, and additionally, key oscillators like MACD, RSI, all are supporting the continuous bullishness in the counter. So I believe prices should remain in a bullish trajectory with potential upside towards 560 and 580. But yes, as stock has given a very good handsome return in past few days, so one should definitely adopt a very cautious approach. I mean, if someone wants to put a 1 lakh, then definitely he or she can go with a 50,000 and rest on a corrective fall. The stock has a potential towards 580 or 560, but yes, in a staggered way, one can go long in this counter.
Okay, all right. That's the view for Hindustan Zinc. One can go long on this particular counter. Let's discuss about auto stocks. I mean, the stock has been, the index has been doing quite well. If you look at Nifty Auto Index, today also it's showcasing a gain of about 1% itself. And a majority of the auto counters also have been doing quite well today, be it the likes of Ashok Leyland, Bajaj Auto, Maruti Suzuki, all of them in the green. And not just that, but auto component players have also been doing well on the back of their good volume prints that came in for the month of November. But yes, Vishnu, how are you placed on the auto theme and anything that you're liking from this space?
Well, so if you're talking about auto, so my favorite stock is a Samvardhan Motherson. Currently, it's from the auto ancillary pack. So I think it's a in completely a bullish phase, and stock is now all set for a 130 and 140 odd levels. So definitely the current market levels are a very good to buy. One should keep a stop loss below 112. That's for a sort of positional call. A stop loss should be around 112 and target will be 135, 140.
Okay, all right. 135 to 140 for Samvardhana Motherson. That looks favorable for you. All right, let's discuss about another stock in focus. That is your Vodafone Idea. The stock has been swiftly gaining in the trade. And of course, the stock has gained its highest level since September 2024 itself. And in the last 8 trading sessions, the stock has already gained out of 6. And the stock has seen substantial volumes in today's trading session as well. Nearly 5% gains coming in for Vodafone Idea. Any thoughts on this particular counter? I know it's a high beta stock, but still from a levels front, anything that you're watching out for, Vishnu?
Technically, stock is looking quite good, and because the stock is comfortably trading above their all key moving averages, so I believe it has a potential to reach towards 12.50. So for that level, one can go long. But as you mentioned, that the stock is a high beta, so there should be a very strict stop loss in the counter, and the stop loss will be around 10.70. So with stop loss of 10.70, one can go long for the target of 12.50.
Okay, all right. 12.50 is the next target levels for Vodafone Idea. Let's discuss about another stock in focus. That is your Swiggy. The shares are rising in the trade today, 2% gains after we did see a block deal on the counter as well. 1.5 million shares were traded in the Swiggy in a block. The buyers and sellers of the transaction, of course, are not known. It will be known after the market closes. But yes, the deal was done just 2 days after the company launched its QIP, which was worth about 10,000 crore rupees. But yes, Vishnu, I mean, today the stock is seeing steady gains, but the stock has been quite volatile in the past couple of sessions. So, what does the near term indicate for you?
Oh, well, so Lovisha, despite that deal, the stock has not, given any significant gain in the prices. So although it is up around 1.90 or 92% in today's trading session, 7 rupees up, but still it is trading below its a crucial horizontal resistance that aligns around 410, 410. So for buyers, let the prices, although one can, keep this stock on their radar and let the prices move above 410. So whenever prices moves above that level, one can go long for the target of 450 or 440, because in between there is no a very crucial resistance for this counter. So yes, 410 is acting as a very crucial resistance. On the lower side, I would say 377, 378 is a very crucial support. If any fall in the stock comes close to 380, one can go long in this counter.
Okay, 380 is where one can go long on Swiggy. All right, let's take another stock in focus. That is your Kotak Mahindra Bank, one of the top Nifty gainers for the day, showcasing a gain of about 2% itself. Vishnu, what's your view on this particular counter? Because the stock has been consolidating in a range of about 2100 to 2150, but today we are seeing good gains on this particular counter.
Well, so I'm quite bullish in this counter. It's a forming a sort of inverse head and shoulder kind of pattern. Although trading below it's a neckline resistance, but I'm quite confident that considering the recent development in financial market, while RBI has already reduced its interest rate, while Fed has recently reduced. So I believe there will be some positivity in the counter, and on the higher side, I would see 2240, 2250 can be seen in days to come. So yes, one can go along in the counter at a current market rate. Risk reward is in favor, because on the lower side, one can put a stop loss at around 2140, mildly 30 to 40 points down from the present levels. While on the higher side, 2250, around 80 to 90 points of gain will be on a card.
Okay, all right. That's the view for Kotak Mahindra Bank. Bullish views coming in for this private lender. But yes, let's move on and talk about another stock in focus. Polycab, the stock has been doing well. We had an interesting brokerage note also that came in for this particular stock, where Morgan Stanley has shared an overweight call on the counter, saying that the volume growth has remained quite healthy despite the rise in commodity prices. They also see strong demand, which is coming in power, transmission and distribution, renewables, solar rooftop and real estate, and even data centers for that matter. And they believe that the company is well placed to deliver optical fiber cables and power, and also plans to diversify exports to Latin America and Africa. So yes, quite a positive note that came in for Polycab. And they also see that margin at an upper end of the guidance of about 12 to 14% over the near term. But yes, Vishnu, how does the stock look like to you? Because the stock has been consolidating at a higher range, but today the stock did well, and we have a positive brokerage note that also came in for Polycab.
I believe the stock should remain in a bullish trajectory because as you mentioned that there has been a bullish note from the broking houses. Apart from that, a couple of days back we have seen a sharp recovery in the counter from the vicinity of 200-day exponential moving average, and that day we have also seen a very good volume in the counter. So I believe that day there has been a very huge amount of participation from the fresh buyers. I believe prices has formed is a short-term base around 6950. With the validation of that base, there is a huge possibilities that on the higher side, 7500, 7600 will be on card. So yes, one can go along in this counter with keeping a stop loss below 6950.
Okay, all right. That's the view for Polycab. Let's discuss about another stock in focus. That's your Eternal, one of the top Nifty gainers. The stock has done quite well today, given that the company has announced updates on its credit rating. For the year till date, Eternal shares have also posted a gain of about 12%, but it is still down by about 21% from its 52-week highs that it had hit in October. Vishnu, what's your view? I mean, what is the next support that we can watch out here, and how does the near-term trend look like for Eternal?
Well, Lovisha, so near-term support lies around 282, 280 odd levels, that has formed a few days back. And that's also the vicinity of 200-day exponential moving average. I can say currently prices are consolidating, or I mean, just trying to accumulate a fresh buyers at a current market rate. But yes, as stock is currently trading below its 21-day exponential moving average. So I would say let's wait for a few some time and let the prices move over 299. So the day prices move over 299, there will be a confirmation, fresh confirmation in buying. So yes, there will be a decisive buying above 299. So just wait for that level. Let the prices move up that level.
Okay, all right. That's the view for Eternal. That's something that we need to watch out for. But yes, let's discuss about another stock in focus. That's your Suryodaya Small Finance Bank. That particular stock did well after the RBI approved 1729 Capital and its associates to acquire up to 10% stake. However, in terms of levels, the stock has come down from 155 odd levels. What's next, Vishnu? What can we watch out for this particular counter, Suryodaya Small Finance Bank?
That's a which small finance bank, Lovisha?
Suryodaya.
So 1 second. Well, so the stock has shown, 1.34 or 1.50% of gain in today's trading session, but still this is consolidating in a broad horizontal band of 145 on the higher side, 130 on the lower side. Fortunately, prices are currently trading in the vicinity of lower range value. So, with keeping risk reward in favor, one can go long in the counter with keeping a stop loss below 130, while on the higher side, I would say 145 and 148 will be on card. So yes, one can go along in this counter.
Okay, all right. 148 could be on the charts as well for Suryodaya SFB. Let's discuss about another stock in focus. That's your Navin Fluorine. Today, the stock has done quite well, and it has continued its upward movement in today's trading session itself. Earlier last month, also we did see that the stock had hit a record high, and it's the third consecutive day of gains for Navin Fluorine. And in the past 3 days, the stock has already surged by about 9% itself. But yes, coming to you, Vishnu, how does the stock look like on the charts for you? I mean, it's the third straight day of gains for Navin Fluorine.
Well, so the stock is looking quite bullish, but as you mentioned that for last, 3 consecutive day prices are extending its winning streak. So yes, stock has still so much room to extend this gain, and that gain should be, containing around 6200, 6300. So one can go long in this counter undoubtedly, and a stop loss should be placed below 5840. While having said that, on the higher side, 6300 will be on card.
Okay, all right. 6300 could be on the cards for Navin Fluorine. All right. Just last rates coming on your screen. Let's take a quick check of that. Nifty has closed in the positive territory. 0.5% gain coming in for the Nifty. Above that, 25,894 levels. So, of course, we did see that the Nifty has extended the gains to about the third consecutive session as well. Let's take a look at how Sensex is fared. The Sensex is also closed with about nearly 400 points gain, 0.5% gain coming in for this headline index as well. If you look at India Wix, that has seen a relative cool off, nearly 4% decline that came in from there, showcasing that there is no immediate near-term panic that the markets have been forecasting as of now. But yes, finally the participation that came in from the broader end of the markets, like I was talking about earlier, Nifty mid-cap showcasing a gain of about 1%, small caps also showcasing a gain of about nearly 1% or so. Coming from the sectoral indices, it was the Nifty Media Index, which is seeing a little bit of a profit booking, flat with a negative bias, and Nifty Oil and Gas, which also ended in the red as of now. But barring that, all of the sectoral indices have ended in the positive territory. The leaders of the gainers from the sectoral perspective is your Nifty Auto Index, which has showcased a gain of about 1%. Nifty Pharma Index also doing well with about 1% gains. It's a second consecutive day of gains for the Nifty Pharma Index as well. Nifty Metals also extending its gains to about the second day, nearly 1% gain coming in for the Nifty Metal Index as well on the back of the US Federal Reserve's 25 bips rate cut, which the markets were widely anticipating as well, and that is why we can see the metal stocks have been doing quite well. FMCG index showcasing a gain of about 0.3%. On the other hand, if you look at Nifty PSU banks, they have also been holding up well, 0.4% gain coming in for there. Nifty Realty Index also showcasing a gain of about 0.7%. But yes, let's take a quick look at the top gainers and losers of the Nifty 50 or how they pan out as of now. Jio Financial, 2.5% gains coming in for there. Eternal, Tata Steel, Kotak Mahindra Bank, 2% gains. Top losers, on the other hand, they include the likes of Asian Paints, showcasing a decline of about 1%. SBI Life Insurance not doing well with about 0.8% cut. Bharti Airtel showcasing a cool off about nearly 1%. Interglobe Aviation also once again settling in the red, extending its loss from yesterday's trading session as well. 0.4% decline coming in for Interglobe Aviation. ONGC and ICICI Bank, some of the other losers on the Nifty 50. But yes, let's talk about one of the top Nifty losers, that is your Asian Paints, once again showcasing a decline of about 1% itself. But yes, coming to you, Vishnu, how does the stock look like? I mean, recently the stock has seen a good breakout, but today once again we are seeing a little bit of a cool off, nearly 1% decline.
Yes, definitely. Current chart pattern is not looking very good. It's forming a sort of lower highs and lower lows kind of pattern. And recently we have seen prices collapsing below its a 21-day exponential moving average. So now it is most likely to head towards a 55-day exponential moving average. I believe on the lower side, prices has a potential to extend this a losing streak, and that streak should be containing around 2650. So from a buy side, I would not suggest anyone to buy this counter at a current market rate. But yes, definitely on the lower side, 2600 is a very good support area. If prices comes close to that level, one can go long in this counter, Asian Paint.
Okay, all right. That's the view for Asian Paints. Let's discuss about another stock in focus. That is your Dr. Reddy's Lab, one of the top Nifty gainers today. It's showcasing a gain of about 1% or so. Vishnu, what's your view? However, I mean, today we have seen the second day of gains for Dr. Reddy's, but still, I mean, the stock has been fairly range bound. So, can this sideways momentum continue for Dr. Reddy's?
See, Dr. Reddy has a very crucial resistance around 1290, 1285. So as long as prices are trading below that level, that's a falling trend line resistance area. As long as prices are trading that level, we might again witness some sort of profit booking from the proximity of that level. So if there would any buying or positiveness in the counter, that will only and only come if prices moves above that resistance area. So let the prices close above 1290 with a full conviction. In that case, we can go long for the target of 1350 as stated before.
Okay, all right. All right, that's the view for Dr. Reddy's. Let's discuss about one of the top losers on the BSE Midcap Index. That's your EU Small Finance Bank, because yesterday we did see a good run-up. Today, a little bit of a profit booking and reversal, which is coming in for this particular counter. I mean, what's your view, Vishnu? I mean, does the positive trend remain intact? Because so far this year, EU Small Finance Bank has seen quite a good, spectacular run-up.
1 second. Well, definitely, stock is looking quite bullish. In today's trading session, we have seen some sort of profit booking it fell around 2%, but still positivity is on card, and the stock is comfortably trading above it's a all key moving averages. I believe as long as prices are trading above 942, every decline in the prices will be seen as an opportunity to create a fresh long positions for the target of 995. So for that level, one can go long. Stop loss should be placed below 940, while on the higher side, 995 will be first target and second target will be 1020.
Okay, that's the view for you small finance banks. A little bit of a pullback that came in for this particular counter. Let's take another stock in focus from the BSE Midcap Index, one of the top losers as well. That's your SJVN. The stocks did see a decline of about 2%. But yes, if you look at the year-to-date chart, the stock has been showcasing a negative trajectory. But yes, coming to you, Vishnu, I mean, can we see further fall from the current levels because the stock has been on a sliding trend?
Well, so the stock is completely in a bearish phase. In fact, I have to, turn the daily chart to weekly to see the next level for this. So, in fact, I am not able to find any, very near level. The next support, aligns around 66 and 67. So, prices has still room to extend this weakness towards that level. So, definitely there is a still pain in the counter left. One should, avoid this counter.
Okay, avoid SJVN. All right, we discussed a range of stocks, Vishnu, but just one last question. Any top picks that you want to highlight? I know you're bullish on Tata Steel, but anything apart from that?
Apart from Tata Steel that we have already talked about, there is a RBL Bank that's looking quite bullish, right? After witnessing a fall of around, on a weekly chart, I'm saying after witnessing a fall of around a 4 consecutive week, this week as of now, prices are comfortably trading and forming a sort of, like hammer kind of pattern on a weekly graph. And it is also taking a support at a 21-week exponential moving average. So I believe apart from that, prices has also witnessed a breakout from a trend line resistance. So I believe on the higher side, 335, 345 should be on card in days to come. One can go long with keeping a stop loss below 296. So yes, this is a RBL Bank apart from Tata Steel.
All right, RBL Bank, something you need to watch out for, right? With that, we have to let you go, Vishnu, but thank you so much for joining and connecting with us.
Thank you very much.
All right, finally we are seeing a little bit of a recovery which is taking place in the markets after a series of losing streak we saw so far this week itself. But yes, the Nifty has snapped its 3-day losing streak. Markets have seen a good and steady recovery today. But yes, if you talk about the spark that has been missing, because after Nifty touched an all-time high last month, it remains nearly 2% down from those levels as of now. Now, the key overhang has been the delay in the US trade deal, which has proved to be the sentiment dampener. But not just that, but the FIIs continue to press the sell button on Indian equities and have already sold off 15,000 crore rupees so far in December as well as November combined. Earlier, we did see Citi coming out with a note saying that Nifty top 100 companies have seen about 11 to 12% profit growth, and now the earnings downgrade cycle appear to have bottomed out. But whether or not that really takes place and convinces flows to make a comeback is something that the market participants have been waiting and watching out for. But it's global brokerages, they have slowly warmed up towards India, saying that the weak market texture that India has seen this year could reverse next year. So yes, the macro factors is something that is favorable for us, but whether or not the trade deal fructifies and we have a stable rupee, given that rupee also weakened today and hit a fresh all-time low, is something that we need to watch out for. But yes, to understand how you should trade in the long term, I'll quickly go across to Aishvarya Dadheech, who is the founder and CEO or CIO of Fident Asset Management, joining us. Aishwarya, good afternoon. The past couple of sessions, we have seen muted market sentiment. Today, however, it's been a reversal, but FIIs, they remain on a sell mode. So what is the next that we can watch out in terms of market sentiment?
Good evening to all the viewers. Obviously, today is a pretty exciting day. We saw a very stark moment in rupee depreciation, and most of the global market was not holding up. Even in Asia, market was not holding up. But to everybody's surprise, we saw a very good Indian market after the pressure that we have witnessed all of this week. But more to that, I believe, the setup on the currency side is definitely causing fear among FIs and as well as the domestic investors. And we have historically seen that whenever rupee have seen such a dive, the rub-off impact is quite visible on equity. And this time again, we have also seen some pressure building up on debt side. But I think everything comes down and boils down to the India and US trade tariff outcome. If we some clarity happening on that side, possibly we will see that not only rupee stabilizing, but even market will take a very good, it's a catalyst for the market to move ahead. So that is what we all believe. We are in I would say, end of this calendar year, that activity will anyway go down after 15th, 16th of December. So not much we are expecting this month from the equity perspective. But yes, if we find something happening on India-US trade tariff, then things can definitely revive big way.
Okay, got it. But yes, Aishwarya, I mean, you were talking about the rupee depreciation as well. It's been a 5% depreciation already this year, and today once again, we have seen rupee hitting an all-time low. While we were expecting that it is already the worst is behind for the currency depreciation, but once again today we have seen an all-time low. So, I mean, what are the trends that we can watch out next? And of course, what does this falling rupee mean for Indian markets going ahead?
So obviously we have seen depreciation of rupee. That has actually begun post we saw the October trade deficit number of almost $41 billion. But if you really look at in more macro side, I'm not expecting it to be a very starking danger for the economy and the market. Obviously, India rupee is one of the worst performing among the Asian peer or the other emerging market peers with this 5% depreciation so fast. But I believe it is more tactical than structural, right? If you look at our CAD, which was running around 0.7, 0.8 negative till H1 of 26, is expected to go to almost 1.7, 1.8 negative if this US-India tariff stalls, or there's no outcome of it, or everything remains as it is. The probability of that is very low. Even account of that, the level of BOP, because of the strong capital account, we are not seeing that much of pressure building up on INR on account of this macro of CAD and BOP playing out. On top of it, we are sitting on almost $690 billion of forex reserve, right? And somehow we believe that RBI is also trying to use it as an ammunition to make sure that the way we can fight with this current Indian tariff and the impact on exporters. So it could be basically a kind of definitely undervalued. We believe is normally if we see any outcome of going through the reverse can also be investors should be cognizant of fact. So overall, I believe INR 90. We might. Hello.
I think there's a little bit of a technical glitch that we're seeing from Aishwarya's feed. But yes, the rupee depreciation is something that we need to watch out for, like we were talking about earlier as well. 5% depreciation, and today also the rupee has hit an all-time low of about 90.47 odd levels per dollar itself. So yes, while we were expecting that the worst is already over for this depreciation, the fresh round of depreciation currency weakness has come in today once again. But yes, on a positive side, we did see some good data that came in from AMFI that indicated that the equity inflows for the mutual funds have risen on a month-on-month basis by about 21% itself in the month of November. Given that, we did see that the monthly flows had seen a 3-month slide. So yes, this definitely comes in as a positive news itself. But yes, the broader mutual fund industries, the total AUM has also expanded to about 80 lakh crore rupees from 79 lakh crore rupees in the month of October. And the SIP retail participation, however, that has tumbled as of now. It has slipped to about 29,445 crore rupees versus 29,631 crore rupees in the terms of SIP participation for the month of November itself. But yes, if we look at from a broader perspective, that is something that we need to watch out for, how the mutual fund inflows is going to pan out for. But Aishwarya, reconnecting with you once again, we have the AMFI data, and what's your assessment? We have seen a good equity inflows in November, but a drop in SIP inflows. Despite Q2 not having a lot of earnings downgrades, what is lowering investors' confidence at the current stage?
Has not been very remunerative for the investors' return. They are mostly seeing negative return on that last 1 year track record, whether they're in large cap, mid cap, or small cap. So that is possibly, they're questioning themselves whether it's the right time for them to invest or not. But in spite of all that underperformance and things of being a difficult market, I don't see this SIP number to be of any danger or anything to be worried of. We believe things are pretty decent and flows are pretty resilient across large cap, mid cap, small cap, and in other asset classes. And we believe these things will expected to improve further if we see more clarity on India US tariffs. So I think one thing which is really coming all things boil down to for the investor sentiment is obviously how India will come out of this deadlock with this tariff thing over there. And second thing, if you really look at on the small cap, mid cap, we at Fident are very, very positive. We believe that time has come. We have seen almost 1.5 years of consolidation in the mid cap and small cap SS space. We have witnessed last quarter that things are definitely improving on earnings side. Lot of mayhem has happened in companies which has gone down between 20% to 40-50% in the last 6-7 months. Basically, the kind of value de-rating has happened across the space. So once we have this clarity on India US, possibly it can be within a month or two, we believe the broader market is something where we will see a lot of catch up to happen, and that will be really creating I would say alpha catch up game for investors in the coming months. So I believe investors should wisely use this coming month or two to build up the portfolio, get into the right companies to see this portfolio growing in the next 1 year.
Okay, all right. Aishwarya, what about the gold ETFs? Because the chase of gold ETFs have cooled off. And today we have the Fed rate cut and prices even rose for that matter. And even for silver for that matter, it has reached that record highs. How do you expect the trend to pan out? Can we see further cool off from the current levels?
So, being in this industry for almost 2 decades, and I have seen these kind of movement across asset classes. So gold and silver is not a surprise to us. Obviously, we all know that the movement has to do everything with the central bank buying and the risk of sentiment globally. But we believe that silver possibly have much more explanation for them to do better in the coming months. But I, as an investor, will start thinking about whether this, I would say, it's a very hard word to say, but this is whether this field theory will keep going on. So I would be more focusing on the asset allocation. And I will be trying to see whether if we can book some money out of gold and silver rather than putting money fresh at this level. Keeping a healthy allocation to gold and silver in the portfolio, but anything which has gone up, that portion should be moved. And I believe the segment which is providing opportunity is obviously the equity, especially the broader market theme, as I was witnessing. So I would be doing that at this juncture. Obviously, silver can surprise us on the positive side further, but I believe consolidation is quite visible, especially in gold.
Okay, got it. All right, this is something that we need to watch out for also. But with that, we have to let you go, Aishwarya. But thank you so much for joining and connecting with us today.
Thank you so much.
All right, that's all we have in this edition of Closing Bell. Today we are seeing finally some recovery and a green picture for the markets. But whether or not this is sustainable is something that we'll be watching out tomorrow, which is the final day of the trading session. But for now, it's a wrap from me. Thank you for watching and stay tuned to Moneycontrol.com.